not give you proper answers, and then when it comes to tens of millions of dollars, use it in a way that is, at best, maliciously self-indulgent. To spend more than you would have spent by normal negotiations for rooms is unthinkable for any agency. But when it's the IRS and they give to their own employees benefits, such as local employees in Anaheim, and then fail to file W-2s for that income, the IRS effectively was guilty of tax evasion. And saying you don't know doesn't help you, doesn't give you an out as a taxpayer. It certainly shouldn't give the IRS an out when they're using taxpayers' money. Professional education is critical. And the IRS, more than any other organization, needs to be well trained, needs to understand not just the fundamental laws, but a long history of rulemaking and federal cases that determine what you do or don't pay, what you're allowed to do or not allowed to do. And quite frankly, they need to be trained to treat the taxpayer as a customer and not a debtor. That and more justifies, when appropriate, travel, when appropriate, visits to the very companies and individuals from whom they receive the revenue that we in government spend. And I want to say here, and hopefully my ranking member will share this, we want the federal workforce to feel that when they have justified travel, reasons to go and have meetings, reasons to use hotel rooms or conferences, that they do so. We don't want Washington think or Cincinnati think to be no training, no travel, no interaction. Just the opposite. We want to get this right. Now, many will say $50 million over these many conferences is inherently wrong. I will say for the tens of thousands of workers who could have received great training, whose travel could have been meaningful but less expensive, that they were cheated out of additional education and meaningful training by this waste. I don't believe from the dais that any of us could determine whether $50 million or $30 million or $90 million was the right amount to spend. But with the help of the Inspector General, we know that much of it was misspent. And that means the American people didn't get a well-trained federal workforce. It means that many federal workers who will look at this hearing aghast and say, I don't get those perks. As a matter of fact, I would get fired if I took one of those perks. That the federal workers around the country should be appalled that there are two standards, one for some and one for the rest. And as taxpayers, we should be appalled that there are two standards, one for us and a different one for people that work for the IRS in some cases. I think it's important that we understand that the reason we're holding this hearing, and thanks to the Inspector General's office, we have the facts just now on a study we've had for a long time, but it concerns a period of 2010 to 2012. And so it's not a new occurrence, and many of these things may not be happening today. Certainly both the administration and Congress have acted to reduce the budgets for some of this kind of effort. But I think that's the most important reason to have a hearing. We want the culture to be spend it and spend it wisely. We want the culture to be how can we get better training and a better trained workforce. And in many cases, the best way is bid for the lowest price for what you need. Don't kick back perks. Those are not what the rank and file wants. They want an opportunity to be well trained. I believe we're going to see a short video or a couple of them today. These are, once again, for a reason. Training videos are important. Training material is important. And if you do training material, not only do you show it to your employees at conferences, but you put it on the web. You make sure they know about it. You use it again and again. But if in fact what you have is entertainment, if you will, training through art, it's not reusable. It doesn't have that staying power. I want to make sure that the lavish behavior that you're going to hear today doesn't happen again. And I think every federal worker wants to know that there's a single standard. They live up to it, and they expect those who they don't know about to live up to it. We often read that opening statement preamble about waste and about whistleblowers. I want to say today that one of the problems we have in government is there aren't enough whistleblowers. This hearing is about specifically spending at these conferences and waste. But on everyone's mind is what the IRS did out of Cincinnati and Washington and Laguna and Dallas offices to taxpayers and organizations that simply wanted to comply and made applications. Those people should have been better trained to be able to give answers quickly. There should have been the employees necessary for them not to wait 3 years. So I think when we look at over $3.2 million that was taken out of a fund to hire people and instead was used for these lavish parties, it's pretty easy to see, don't talk about budget tightness until you tighten the budget where you can. I think that there's no question you're going to see outrage on both sides of the aisle here today. This is outrage that needs to be tempered with the fact that on the second panel, we'll have a new acting commissioner. This committee and other committees of Congress need to work with the new commissioner so that he has the opportunity to straighten this organization out. Yesterday, Mr. Wilful called me and we had a conversation, and I say I don't normally share conversations, but the conversation was important because it was the kind of a first step that I think is about the transparency of, you tell us what you're doing, most of it will never be spoken, it doesn't need to be spoken public. But Mr. Cummings and myself, Mr. Camp, Mr. Levin, need to know, in the various committees in the Senate also, that the work is going the right way, that a culture that had gone wrong has been changed, and a culture that would see organizations abused for years without a whistleblower coming forward, or that would see some of these conferences and not be as outraged as we were, is a culture that needs to change. And for those who were outraged, and those who are outraged today, I want everyone to understand, for the vast majority of federal workers, this is not the norm. And for the rest of the federal workforce, if it's the norm, it's time to blow the whistle and get it changed. The American people deserve value for their hard-earned money. And I recognize the ranking member for his opening statement.
Thank you very much, Mr. Chairman. It is, I am glad that we are holding this hearing this morning. It is a very important hearing. I think that we must pause for one moment and give credit where credit is due. To you, Mr. Chairman, and to this entire committee, to Mr. Micah. You know, I also serve on the Transportation Committee, and Mr. Micah is chairman of that committee. He called hearings, and you called hearings. And we all worked together because back when the GSA scandal came up, we worked in a bipartisan manner, and along with our actions, along with those of the president, we have been able to, I think, straighten out GSA. But we did more than that. I think we sent a powerful message throughout the federal government that you cannot take the money of American workers and waste it. And so I pause this morning to applaud what we have already done. But as I always say, we can do better. And we will. Today we're going to hold this hearing to examine excessive spending by the IRS at a conference held in Anaheim, California in 2010. I understand that this conference occurred 3 years ago, I'm aware that many reforms were put in place so something like this will not happen again. And I know many examples we will discuss today, like the ridiculous Star Trek video, and I swear to God, I have looked at that video over and over again, and I swear I do not see the redeeming value. And I was up at 3 o'clock this morning watching it, because I was trying to get to the redeeming value. Couldn't get there. I worked hard at it now. However, these facts do not lessen my frustration and anger at this utterly wasteful spending. Take the Star Trek video, for example. Again, there's absolutely no redeeming value, and I can identify in the video. And perhaps you, Mr. Fink, can help us understand what it was. It is not only a parody of a television show, but a parody of what many people unfairly think about federal workers. And let me pause here and thank the chairman for what you said about our federal workers. You know, I'm a big defender of federal workers because I think a lot of times they are criticized when they should not be, and they get a raw deal. Their wages get frozen, but yet and still the babysitter is still costing $1,200 a month. And so I want to make sure that they understand, that we understand, that this is not, and I was glad you said it, Mr. Chairman, that this is not what we think of federal workers, what's happened here. And, you know, I go back and I could not, every time I would watch these videos at 3 o'clock this morning, you know, I said to myself, you know, this is appalling. But you know what really got me? When I walked out the door to come to Washington and to see my constituents who get the early bus, the ones that go down to the Sheraton Hotel in downtown Baltimore and clean the floors, them. And I thought about the man who came to me the other day because he had just gotten a letter from the IRS about an audit. And I believe deep in my heart, he didn't mind being audited. He was scared as all get out, but he wants to know that he's been treated fairly. And he wants to know, and these are the words that I'm going to concentrate on today. The other day I concentrated on truth and trust. Today I'm going to add on to that, take and waste. Take and waste. What happens here is that when we have episodes like this, it has an impact on the average person. I live in a block where most people don't even make $50,000 a year, but yet still we can produce a video that has no redeeming value. None. And spend taxpayers' hard-earned dollars for that. And then there was that line dance. Couldn't see any there either. And so I say we can do better. But guess what? Mr. Fink, the money that was spent on that, that's my money. That's the lady who got the early bus this morning. That's her money. The one who makes $35,000. Her. The gentleman up the street from me that makes $45,000. Hauling trash. That's their money. And so it was wasted. In my district, I can tell you that $50,000 is a huge amount for families who are struggling to get by. That's more than many households make in this country. Unfortunately, this was only part of a broader problem, which was the growth of IRS conference spending over the last decade. The Inspector General's report finds that the IRS spent approximately $48.6 million on conferences over the past 3 fiscal years from 2010 to 2012. But the IRS spent far more than that in the 3 prior fiscal years from 2007 to 2009, when the IRS spent an astonishing $72 million on conferences. And I know, Mr. George, that the scope of your inquiry was limited, but let me say this, Mr. Chairman, it would be legislative malpractice. Legislative malpractice if we did not bring Mr. Schulman in here to ask him, for him to explain to us why from 2007 to 2008, in 2007, the conference budget was $13,395,000, and then it more than doubled when we're going into a recession, when President Bush is coming to us telling us that the sky is about to fall, that our economic situation is about to go over a cliff. We then double it. It would be legislative malpractice if we don't figure out what happened there. Because if we are truly going to get to the cause of this, we have to understand what happened to cause something to double. I'm almost finished. According to the IRS spending data, the single largest increase in conference spending occurred between 2007 and 2008, when spending jumped by more than $15 million in a single year. This is simply unacceptable and absolutely unnecessary. It may be difficult to find any good news today, but at least there are some indication that things are beginning to change. In 2011, after news broke about another wasteful conference held by the General Services Administration in Las Vegas, the president issued an executive order that significantly reduced travel and other expenditures across all federal agencies. And I go back and I give you credit, Mr. Chairman. I give Mr. Micah credit. A lot of these things had to do with what we did in this committee. In 2012, the Office of Management and Budget directed all agencies to reduce their travel expenditures by 30% below their 2010 levels. OMB also required conferences costing more than $100,000 to be approved at the Deputy Secretary level, and it prohibited conferences over $500,000 without a waiver personally signed by the agency head. As a result, the Inspector General's report explains that the IRS has now cut spending on conferences by 87% since 2010. We did that. We did that. And we ought to take credit for it, Mr. Chairman. Conference spending dropped to $6.2 million in 2011 and to less than $5 million in 2012. I'm also very encouraged by the actions of the new head of IRS, Mr. Werfel, who is here with us today. And Mr. Chairman, I agree with you. He is a breath of fresh air. I know he called you right after he got appointed and called me literally within hours of after getting appointed. And he said one thing that I shall never forget. He said, I will, number one, figure out what's going on, meet with you, Mr. George. He said, number two, I will hold those responsible who are bad actors in the agency. And number three, which means something to that lady that I talked about in my block that got on the bus at 6 o'clock this morning, he said, I will restore trust in the IRS. And so he has been in this position for only 2 weeks, and he has already taken significant action to begin restoring the integrity of the IRS and holding people accountable. In fact, as news reports today highlight, he removed 2 IRS employees from their positions and placed them on administrative leave for their alleged actions at this 2010 conference. Mr. Werfel has a critical job ahead of him. One of the most damaging aspects of incidents like the IRS conference in Anaheim or the GSA conference in Las Vegas is that they hurt the reputation of all government workers who commit their lives to public service. And as I close, Mr. Chairman, I hope you will join me in offering our committee support as he works in the weeks and months ahead, and I know you will because you just said you would. And as I said at our last meeting on IRS, we must dedicate ourselves to two major goals. 2 goals, truth and trust. Both goals are key, and based on his actions today, Mr. Werfel is working to achieve them. And with that, Mr. Chairman, I thank you for your indulgence, and I yield back.
I thank you, Mr. Cummings. Members will have 7 days to submit opening statements for the record. We now welcome our first panel of witnesses, a returning, actually 2 out of 3 returning guest, the Honorable J. Russell George. He's the Inspector General for Tax Administration. And Mr. Gregory Kuntz, who is Assistant Inspector General for Management Services and Exempt Organizations. And welcome back. We know that you had a big part in this investigation. We also welcome Mr. Ferris Fink. He is Commissioner of the Small Business and Self-Employed Division at the Internal Revenue Service. And pursuant to the rules of the committee, would all 3 witnesses please rise, raise your right hand to take the oath. Do you solemnly swear or affirm that the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
I do.
Let the record, please be seated. Let the record reflect that all witnesses answered in the affirmative. Now I understand, Mr. George, is there one opening statement between the two of you?
That is correct, Mr. Chairman.
Thank you again, Mr. George, for being here. I know we're going to rely on you for a number of questions, but I believe Mr. Kuntz is going to take the lead, and we appreciate that. I also appreciate the fact that you've created a relationship with the acting commissioner that I believe is going to provide a great deal of the transparency without redundancy by committees, and I think that's important too. So what I'd like to do is I guess recognize Mr. George. Do you want to make any comment before we go to Mr. Kuntz?
Yes.
Please, the gentleman's recognized.
Chairman Issa, Ranking Member Cummings, and members of the committee, thank you for the opportunity to discuss IRS conference spending. Today's testimony highlights the results of our audit of IRS conference spending for fiscal years 2010 through 2012. My oral testimony will focus primarily on a conference held in Anaheim, California in 2010. This conference was selected for review because we've received a specific allegation of excessive spending. Overall, we found that the IRS spent, as was pointed out, an estimated $49 million for 225 conferences during the 3-year period of our review. The conference in California was held at the Marriott, Hilton, and Sheraton hotels in Anaheim in August of 2010 at a reported cost of $4.1 million. The Small Business Self-Employed Division of the IRS conducted this conference for an estimated 2,600 executives and managers. As required at the time, the conference was approved by the 2 deputy commissioners of the IRS. We could not validate the accuracy of the $4.1 million conference costs because the IRS did not have effective controls to track and report those costs. $3.2 million of the conference costs were paid from unused funding originally intended for hiring enforcement employees. Instead of using the required IRS personnel whose job it is to search for the most cost-effective location for the conference, the IRS used 2 commercial planners to identify a site for the conference. These 2 planners were not under contract with the IRS and thus had no incentive to negotiate a favorable room rate. They were paid an estimated total of $133,000 in commissions based on the cost of the rooms paid by the IRS. Rather than negotiate a lower room rate, the planners specifically requested 25 or more VIP suite upgrades with amenities from the hotel, along with a reception with complimentary drinks and daily breakfasts and other refreshments. The agreement with the hotels indicated that a total of 132 suite upgrades were provided each night by the 3 hotels. For example, the commissioner and deputy commissioner for the Small Business Division stayed multiple nights in presidential suites at the hotels. Other examples of questionable spending for the conference include planning trips costing $35,000, 2 video productions which were shown at the conference. Local employees were authorized to stay at the hotel at an expense of $30,000. $44,000 in travel costs were incurred for employees to staff booths in an exhibition hall. Gifts and trinkets were given to IRS employees costing $64,000, and $135,000 were expended for outside speakers, one of whom was paid $17,000. This speaker created 6 paintings at 2 sessions. 2 of the paintings were given away at the conference, 3 were auctioned off for charity, and 1 was reported by the IRS as lost. In addition to this audit, TICTA conducted other reviews of individuals related to the conference, which focused on potential misconduct. Although the details of our actions are confidential pursuant to Title 26, Section 6103, subsection B2A and F of the Internal Revenue Code, We did refer an issue to the Internal Revenue Service for consideration of administrative action. Overall, our review of this conference did not uncover any criminal violations. In conclusion, it is worth noting that the IRS conference spending, as was pointed out, dropped over the 3-year period from a total of $38 million in 2010 to $5 million in 2012. This was due in large part to increased oversight and controls instituted at the IRS. We did make further recommendations to tighten controls, and the IRS has agreed to all of our recommendations. Chairman Iser, Ranking Member Cummings, members of the committee, thank you for the invitation to appear.
Thank you. Mr. Coons?
I have nothing. I look forward to your questions, Mr.
Thank you. Mr. Fink?
Chairman Issa, Ranking Member Cummings, members of the committee. My name is Ferris Fink. I am the Commissioner of the Small Business Self-Employed Division of the Internal Revenue Service. I appreciate the opportunity to appear here today. I have worked for the Internal Revenue Service for 32 years, starting as a grade 7 revenue officer in Ohio. I became the Commissioner of the Small Business Self-Employed Operating Division in May of 2011. I am proud to be an IRS employee and serve alongside thousands of dedicated public servants who administer our tax laws. My division has 24,000 employees, and it accounts for the majority of the $50 billion that the IRS collects in enforcement revenue each year. The meeting we held in 2010 was to train 2,600 managers from 350 offices across the country. We needed to ensure that they had the tools to lead their employees and adapt to major changes that were occurring. At the time of this meeting, almost 30% of our managers were new or had only been managers within a 2-year period. Another focus of the meeting was employee safety. There had been a substantial increase in the number of security threats against employees of the Internal Revenue Service. I think it is important to point out that in carrying out this 2010 meeting, we followed IRS and government procedures that were in place at the time. The Treasury Inspector General's Office review found no instances of fraud, but we're now in a very different environment, and there are many new procedures in place at the IRS governing training and travel. In hindsight, many of the expenses that were incurred in this 2010 conference should have been more closely scrutinized or not incurred at all, and were not the best use of taxpayer dollars. Given the new procedures and restrictions on spending, we would not hold this same type of meeting today. Mr. Chairman, that ends my statement, and I would be happy to answer any questions.
Thank you, Mr. Fink. I need to announce for both the witnesses and the folks on the dais that we expect votes momentarily. It will be a long series of votes. We could be gone for up to an hour. So I would ask the witnesses, we'll make room available back there for you. We will come back immediately, and I mean fast as a bunny, after the last vote. So as soon as myself or actually anyone gets to the chair, we'll recommence so that we can get the day underway. I've been advised these may be the only votes of the day. I would also advise that you please return, if at all possible, if you don't have travel plans. And with that, I'll recognize myself for our first round. Could we have those will be last votes of the day, yes. Could we have the suites, please? Now, as I show those, I want everyone to understand that these are suites that were upgrades. I think even Mr. Fink may have enjoyed one similar to this. These are not uncommon for large conventions. What we want to make clear is the allocation and how we paid for them is, I think, a big part of what the IG is aware of. Is there another picture, or is that the only one? Okay, well, let's just say that I've been honored when I was chairman of an association to stay in one of those. It was comped by the hotel after a large bidding on taking virtually every room in the hotel, and I assure you the room rates for our guests were below what the IRS paid in that hotel. Having said that, could we go to the video, and then we'll begin with the questioning. I think Mr. Cummings and I both have seen it enough, but for some who have not seen it, I want to get it into the record. And this is a short clip. It won't be the whole thing, but it sets a tone. Lacey, I know you haven't seen this.
We're trying to get ready for Anaheim. Stay in line.
Have you seen Ferris? Where is Ferris?
Attempting to modulate the frequency now. The no taxion's lack of skilled tax leaders has resulted in a widespread case of confusion, uninformed taxpayers, high noncompliance, no strategic vision. I'm afraid without a wealth of skilled leaders, anarchy is spreading across the planet like a virus. Shall I wear a ski cap to cover my ears, Captain?
Nah, your ears are fine. But you gotta loosen up, Fink. Play a little Wii once in a while. It's gonna work.
I'm sure many more will watch that, and some will laugh. My questions are, what a surprise, and I'll start with Mr. Fink. What were you thinking? Were you thinking this will never be seen? Or were you thinking, how will this look when it is seen? Please start the clock. Please speak close to the mic. We couldn't hear.
Mr. Chairman.
You're not on.
Mr. Chairman, those videos were, at that time they were made, were an attempt to, in a well-intentioned way, use humor, the Star Trek video to open the conference. The dance video was used to close the conference. They would not occur today based upon all the guidelines that exist, and frankly, they were not appropriate at that time neither, Mr. Chairman. And the fact of the matter is it's embarrassing, and I apologize. Those videos, I noticed in the Inspector General's report there is not a clear delineation of the cost of both the videos, but they are embarrassing, and I regret the fact that they were made.
Well, let me do a follow-up question, because one of the most concerning part of the IG's report is it appears as though at the IRS, both in this and other cases, we can't count on proper accounting of what money is spent on what. There were at least many cases in which people traveled for conferences during this entire period, and as far as I know today, in which if they simply bill it as travel and not as conference travel, then it won't be seen as conference travel. How are we to know, and obviously without receipts and even a missing painting, how are we to know that these kinds of changes have occurred to where there's a auditable train of where money was spent?
Mr. Chairman, to respond to that question, of course, it's already been spoken that there's been many changes at the IRS. One of the changes at the Internal Revenue Service is around the tracking of expenses, around conferences, meetings, and training. For the particular conference in Anaheim, we were only able to track 90% of the costs. There's a variety of reasons that the other 10% were not accurately tracked. It's because people did not use the tracking code that was in place. It's also that folks were on other travel, visiting offices, doing things of that nature, did not use the conference tracking code, and may have charged their expenses to another code for another business purpose.
Well, the reason I ask that is twofold. First of all, if I did it as a business and thus couldn't account for receipts, wouldn't your inspectors say disallowed?
Mr. Chairman, yes, our auditors would look at records. They do have some discretion as far as the reasonableness of the records that are submitted, but we take very seriously the role that we occupy in ensuring that people have the appropriate business records. This year, example that you have provided, we only did have 90% of the information as far as the expenditures.
Now, if I were to have local folks get hotel rooms and meals and so on, and not issue a W-2, I made a fairly serious allegation as a layman. I'm not saying that it's the law exactly, but I could characterize it as tax evasion. If a company didn't do it and the employees, particularly let's just say that they're accountants and very knowledgeable of the law, didn't do it, there were no W-2s, no 1099s, essentially no accountability for this revenue that's supposed to be taxed, what would you do in that case?
In that case, Mr. Chairman, as pointed out in the Inspector General's report, you have to look at each situation case by case. And in that particular situation, you would look at the individual facts that existed in that situation. In the matter that you're referring to here is we now have issued W-2s to all of what we characterized as being local travelers after it was brought to our attention by the Inspector General and in their report that we had not appropriately accounted for all the local travelers, sir.
I appreciate that, Mr. Kuntz. I guess I'll characterize it to you. It was not in the tax year in which it was earned, so the employees did not voluntarily file, as far as we know. I know that's not available to the public, but the employees didn't take it on themselves, knowledgeable people about taxes, to say, oh, I've got to pay taxes on this. The employer did not issue the required tax statement to itself, if you will. I characterize it as tax evasion because it can't just be swept under the rug. These were knowledgeable parties on both sides, weren't they?
Yes, I mean, IRS did not issue W-2s, and in fact, we found 7 people that they didn't identify that were local that actually traveled, so those would have been some of the ones that didn't get W-2s.
Now, I'm going to just close with one quick question. I know because not only do we have votes, but I want to be sensitive to the time. I've worked with event planners, and whether it was an event planner inside the IRS, which it should have been, or the ones that were hired, there does seem to be a little sleight of hand. They received a commission based on the more that was spent, the more they received. And apparently they, as I understand from your report, they got free rooms for FAM trips, for familiarization trips, while IRS employees paid for the rooms. Again, as far as I can tell, that increased their commissions while lowering their unreimbursable cost. Is that roughly right?
That'll be right. IRS also received, I think, 10 comp rooms per night, but most of the upgrade rooms IRS had, they paid the $135 per diem rate for.
And have you done any work to look at comparables from other associations? I headed the Consumer Electronics Association, puts on the CES, but I also was on smaller associations. Have you done any work to figure out what the comp would be? I couldn't find that there, and I want to not cast any blame on the various hotels, because if somebody comes and says, this is what I want, it's not your job to make the dumb smart if you're on the selling side.
No, what we looked at is that they could have actually potentially negotiated the room rate down from $135, as you mentioned, rather than solicit the 25 plus VIP suite upgrades per hotel. So they actually went out and said, we'll pay you full per diem, which is the most they could pay. And then they said we wanted to have various amenities, including the suite upgrades.
And I said last, but with the ranking member's indulgence, there was a mention of rooms, various rooms that are various food that was provided. IRS employees receive full per diem, of course. Did you have a substantial amount of per diem returned as a result of their getting meals, which would be the law? In other words, you're not entitled to keep the per diem if you didn't have to use it because others provided you meals.
Actually, federal travel regulations do not require employees to deduct that from their per diem, but we did do a statistical sample, and all the employees in our sample got full per diem of $71 per day, even though they received the continental breaks. But there was nothing wrong with that according to federal travel regulations.
It just smells real bad.
Well, we essentially paid for breakfast twice, probably, Mr. Chairman.
But negotiating paying for breakfast and then paying full per diem created a situation in which they got overpaid, basically.
Not technically according to federal travel regulations, but again, from a taxpayer perspective, they got breakfast and the government paid them for breakfast at the same time.
Thank you, Mr. Cummings.
Mr. George, according to your report, the IRS conference in Anaheim in 2010 cost more than $4 million. Is that correct?
Yes, it is, sir.
Although your report does not identify any legal violations, it raises concerns with the way taxpayer money was spent. For example, your report raises concerns with how the IRS chose Anaheim as the location for this conference, and it questions the use of non-government event planners to identify this location, picking up where the chairman left off. Specifically, your report states, and I quote, the use of the planners in this process increased the possibility that the site selection did not result in the lowest cost to the government. Is that right?
That is correct, sir.
Now, let me go to you, Mr. Fink. I must tell you that I'm pleased that you apologize. That's a major step, because I think it's important that the American people know that somebody feels bad about this and remorseful. But Mr. Fink, let me turn to this. The committee obtained documents from the hotels that hosted the conference in Anaheim. And one of those documents is an email between two Marriott hotel employees. I want to read it to you and get your response. Now, I want you to listen to this. It says, and I quote, "Orlando and Las Vegas are out!" Exclamation marks. This is fantastic news, as Orlando was $1 million less in travel spend. The funding is there, and they have been instructed to move forward. End of quote. Mr. Fink, this email sounds like the hotel employees were mocking you and maybe even taking advantage of the IRS. It says you could have saved $1 million by holding this conference in Orlando. I have no idea if these hotel employees knew what they were talking about or just theorizing. So let me ask you, since you were the man in charge, how did you choose Anaheim for this conference? Did you look at other locations like Orlando? And were any of those other locations less expensive?
Representative Cummings, first off, I'm not familiar with the email, but I will tell you what I have been told was done at that time was that we used a travel estimator. There is a travel estimator that is used by the Internal Revenue Service when planning training and meetings. That travel estimator, we looked at over 20 different locations. And in using the travel estimator, we came up with 3 locations that could handle this size of conference, that would be able to be logistically not incurring additional costs as far as traveling people long distances when they arrive. So we looked at those types of things that were in addition to using the travel estimator to look at, I believe it was over 20 different locations, so that we had to look at and make sure that we were not going to incur additional local expenses, but along with that, it was just a matter of logistics when we came up with the final 3 cities, sir.
Mm-hmm. And so you said several times during this hearing that if this were to take place today, it would be different. How would it be different?
It would be different today because, Representative Cummings, the conference would not occur. Under the guidelines and the restrictions that exist today, a conference of this nature would not occur.
I note that back in 2010, there were 152 conferences, and then in 2012, I think there was like 24, and an 87% decrease. And thanks to this committee and transportation, of course, and President Obama. Do you think that was a good thing?
Absolutely.
And why do you say that?
The reason that I feel it was a good thing to see the decrease, it showed that we had increased our scrutiny, that we were paying more attention to how we were using the taxpayers' money, and that we were taking a harder look as to what was the necessary training that individuals were receiving.
Now let me ask you this. Did the event planners give you a cost-benefit comparison of the various locations before the IRS chose which to use?
Representative Cummings, I had no interaction with the event planners. I do not know if they gave us a cost estimate. I know that we chose the cities as far as looking at which cities would be appropriate, and we also made the final decision around where to hold the conference.
Mr. George, I'd like to ask you about the room upgrades. As I understand your report, 132 hotel rooms were upgraded to suites, but the government still paid its normal per diem rate of $135 for these rooms. That's right, I think you testified to that earlier. So your report is not saying that the IRS paid $1,500 a night for these rooms, which I guess they might normally go for, Mr. Cooks. Your report is saying, if I understand it correctly, that instead of accepting these room upgrades, the IRS should have negotiated lower prices for all the rooms or for the whole conference. Is that right?
That is correct, sir.
And Mr. Fink, my final question, why didn't you do that?
First off, I was not aware that we had the ability to do that, and as of today, I'm not sure that we could have done that, Representative Cummings. I do believe, though, that we did pay the $135 per diem rate, and in paying that $135 per diem rate, there were additional items that were included by the hotels to use during the conference.
Well, thank you, Mr. Chairman.
I thank the gentleman, and I'll yield to myself for questions. And we do have the vote going on, folks. We probably have about 4 or 5 minutes left here, less than that. But let me start out with Mr. Georgia. Your report indicated $135,000 was spent just on speakers for this event. Is there any similar experience in spending that amount of money for a conference that you're aware of?
I am, in the course of conducting this audit, we did not compare previous conferences to this one in terms of that expense.
Well, Mr. Cummings talked a little bit about our efforts to rein in GSA, and we had conducted some reviews of GSA's operations and found out that they spent, it wasn't even $1 million on a conference, but outrageous spending was determined. We couldn't get much attention on that. Mr. Fink, are you familiar with this guy? This is the GSA official in the hot tub. Have you ever seen that picture?
I have seen that picture, yes, sir.
No. Well, I just wondered if that was any motivation for the dramatic change in your spending. You spent $37 million in that year, and then Congress held these hearings, which we participated in, and the famous guy in the hot tub probably did more to bring egregious spending under control. Did this affect you at all?
The new guidelines that were put into place, Congressman, the new restrictions on travel and on spending funds for training and things of that nature, that was handled primarily by what would be the operations support side.
Well, did you approve expenditures for the or involved in the planning of the $4 million conference in Anaheim?
No, sir, I did not.
You attended?
Yes, sir.
And you did participate in the conference?
Yes, sir.
Yes. And then afterwards, I understand you were promoted. Is that correct?
I became the commissioner after the conference.
I understand the planners and some of the others got bonuses. Is that correct?
There were 6 bonuses that were paid, yes, sir, to individuals who had...
Did you get a bonus that year, 210, 211?
For performance, yes, sir.
Did you, are you aware of the money that they spent, of course, on this particular enterprise that paid $17,000 with this individual who is, I guess, some sort of art expert and produced 6 drawings, paintings?
Yes, sir. I saw that in the Inspector General's report, and also I attended that session.
You did? You did. And do you think that that was a proper expenditure of taxpayer dollars?
For what we were trying to convey at that time, and based upon his expertise, the way he communicates and the message that he delivers through his presentation.
I was surprised to hear you said one of the paintings is, a couple were auctioned, I guess, and they got less than $500 for charity. But one is missing. Maybe we should offer a reward for the missing. You don't know where the missing painting is, do you, Mr. Fink?
Absolutely not, sir.
Right, okay. And then I understand, you know, we had these are the famous, these turned over to me by some whistleblowers. These are the famous $20,000 drumsticks that were used in the Las Vegas GSA conference. And I thought that wasteful spending, but